Good day and welcome to the Midday News on Souqnews Television. I am Omevi Idolo. Now let's begin. The federal government has secured 200 hectares of land within the Lekki Free Trade Zone in Lagos to establish a national building materials hub. Minister of Housing and Urban Development, Ahmed Musa Dangiwa, who disclosed this during a tour of the Lekki, Lagos and Lagos Free Trade Zone, said the project is designed to reduce construction costs, boost local content, and strengthen domestic production capacity in the housing sector. He added that similar hubs would be built across all 6 geopolitical zones of Nigeria. According to the minister, the Lekki hub will be strategically supported by seaports, airports, railways, and road networks to ensure smooth operations and distribution. He revealed that an investor has already been secured to commence development, noting that the project will help reduce Nigeria's reliance on imported building materials, conserve foreign exchange, and expand job opportunities through local manufacturing. The initiative forms part of the federal government's broad plan to set up building material hubs in Ogun, Abia, Delta, Kogi, Kano, and Gombe states. Each hub would produce roofing sheets, tiles, ceilings, and doors while providing critical infrastructure such as power supply, water, and worker accommodation. Investors will fund and manage the facilities under special incentives granted in free trade zones before eventually handing them over to the government after recouping their investments. The Defense Industries Association of Nigeria, DIAN, has called on the federal government and the armed forces to increase patronage of locally manufactured defense equipment as part of efforts to strengthen national security and curb insurgency. Speaking at the African Chiefs of Defense Staff Summit in Abuja, DIAN Secretary General Kola Balogun explained that consistent procurement of indigenous military hardware would boost defense capacity while addressing unemployment and idleness among youths who are often vulnerable to insurgents' recruitment. Balogun highlighted that increased patronage of local industries would not only enhance security but also create jobs, stimulate innovation, and support Nigeria's economic growth. He noted that existing policy tools such as the Local Content Act and Executive Order 5 were designed to promote indigenous capacity but require stronger implementation to deliver full impact. According to him, a thriving defense manufacturing sector would contribute to long-term stability and economic resilience. He further stressed that greater investment in locally made equipment could foster regional collaboration and support the development of an African non-wide military force that depends on African-made technology. DIAN pledged to continue working with regulatory bodies to ensure standardization, quality assurance, and compliance with global best practices while encouraging more local producers to join the sector. The more we encourage local capability, the more we reduce insecurity, strengthen our economy, and secure our future, Balogun said. The Nigeria-South Africa Chamber of Commerce has announced a new strategy to empower youth and small and medium-scale enterprises in order to strengthen bilateral trade between both countries. Chairman E.J. Jidema explained at the Chamber's monthly breakfast session that the initiative will focus on innovation, digital economy opportunities, and creating an inclusive platform for business to thrive. According to Jidema, the Chamber has built a strong foundation over the past 25 years, and the new phase of work will ensure small businesses and young entrepreneurs take the lead in shaping trade growth. The Chamber also emphasized the importance of digital engagement as a tool to improve business competitiveness and unlock untapped trade opportunities between Nigeria and South Africa. Speakers at the event highlighted the importance of government intervention in implementing over 40 existing bilateral agreements. They also called for increased student, professional, and media exchange programs to deepen collaboration, tackle misconceptions, and build stronger economic partnerships across both nations. The United Kingdom Nigeria Infrastructure Advisory Facility, in collaboration with the Nigeria Governors Forum, has concluded a nationwide initiative aimed at advancing state-led electricity market reforms. The program, held through a series of workshops across Lagos, Calabar, Kano and Jos, brought together participants from all 36 states and the Federal Capital Territory to build capacity for integrated resource planning, energy modeling, and sustainable electricity development under the Electricity Act 2025. According to the organizers, the session equipped policymakers and regulators with practical tools to design investors-ready and resilient electricity markets at the sub-national level. Director, Legal and Head Power Desk at the Nigeria Governors Forum, Chijoke Chukwu, said the success of the workshops underscored the critical role of states in shaping Nigeria's electricity future, stressing that leadership and technical capacity would be central to implementing the new energy framework. The initiative built on UKNIAF's experience with states such as Akwa Ibom, Enugu, and Oyo, which are early movers in electricity market development, as well as its technical support to the Federal Ministry of Power in preparing the recent approved National Integrated Electricity Policy and National Integrated Resource Plan. With states not empowered by law, the partnership is expected to ensure stronger coordination, private sector partnership, and sustainability in Nigeria's decentralized power sector. Asian markets gained on Friday, lifted by a technology-driven rally on Wall Street as investors turned their attention to key United States inflation data expected later the day. The MSCI Asia Pacific Index edged higher, supported by strength in blue-chip Chinese shares and Hong Kong's Hang Seng Index, though Japan's Nikkei slipped slightly. Analysts noted that earnings momentum from major technology firms remains strong, keeping investor sentiment upbeat despite mixed signals in broader markets. In China, however, technology shares showed volatility after Capricorn Technologies issued a risk alert following a sharp surge in its stock price. The Star 50 index fell by 3% after a recent overall sentiment remained positive, with the CSI 300 index advancing. Market strategists explain that such fluctuations reflect natural corrections as investors adjust expectations in fast-growing sectors like artificial intelligence and semiconductors. Global focus has now shifted to the release of the United States Personal Consumption Expenditures Price Index, the Federal Reserve's preferred inflation measure. Traders are increasingly pricing in an interest rate cut as early as September, which could support further equity gains across Asia. The expectation of low borrowing costs is also pushing the dollar lower, while commodities like oil and gold remain under pressure. Currency markets, dollars weakens as traders bet on September rate cuts. The United States dollar is on track for a 2% monthly drop in August as investors brace for a possible interest rate cut by the Federal Reserve next month. Market sentiment has been dampened by political pressure on the central bank, with President Donald Trump attempting to dismiss Fed Governor Lisa Cook, who has responded with a lawsuit challenging his authority. Analysts warn that any perception of weakened Fed independence could fear inflation expectations and push long-term yields higher. Despite stronger than expected second quarter economic growth, traders are focusing on the Fed's preferred inflation gauge, the PCE price index, due later on Friday, as well as next week's labor market report. Market pricing now reflects an 86% chance of a September rate cut, up sharply from 63% a month earlier. With expectations of over 100 basis points of easing by mid-2026, Fed Governor Christopher Waller has already signaled support for an early reduction to bring rates closer to neutral. Currency movements have been mixed, with the euro and sterling heading for monthly gains against the dollar, while China's yuan has surged to its strongest level in 10 months. The dollar index, which measures the greenback against 6 major peers, is on course for a 10% yearly decline as political uncertainty and shifting monetary policy continue to weigh on investors' confidence. Many thanks for watching. Please do well to follow us on all our social media platforms at Souqnews TV. I am Omivi Ilolo. Coming up shortly is Just Africa. Do well to stay with us.